Greetings, Keith Prather here with the Powersports report for NCM. I want to just reiterate what I did in maybe some of the other videos, but this is a leading index, and this leading index for powersports equipment sales incorporates a lot of government data, and a lot of that government data has been delayed because of the government shutdown. And we're seeing those delays kind of affect the way the index is actually performing. So it might be just a little bit hotter than what we expect. And then again, I'm going to give you a bunch of underlying factors that I think are helping drive power sports sales, at least the optimism and the outlook for that. And if you're watching this, I also wanted to reiterate that this is a leading index, so it's telling us what those operating conditions should be for power sports equipment dealers headed into 2026. It looks out over Q1 and Q2, kind of gives us a little bit of what that signal is. So the November index came in a little bit hotter than expected, 90.3. That's up from where we were in October at 88.1. It's about 2.5% higher month over month between October and November, and about 1.7% higher year over year. And I will just say this, we don't have it in the data yet, but there's always a weird phenomenon that happens when we have a government shutdown. What you see is during the shutdown, you see a lot of spending, whether it's government employees or even those that just are mildly affected by the government shutdown, bunker a little bit. They don't spend as much as they thought they would, or that they almost go into a little bit of a fear hibernation, right? It's like the fear factor overwhelming their spending, and it spreads throughout the whole economy. So we see consumer spending generally a little bit weaker than it should be during the government shutdown. But what happens is most of us go in and we're able to tighten our belts during that lockdown period more than we thought we could. So when we come out of it on the other side, even if we have past due bills and we pay those past due bills, what most consumers learn, and this has historically been the case, is that they save more money than expected. And so when they get their retroactive pay, all of a sudden they're sitting on more cash than they thought they had. And a lot of them will go out and make purchases. So, typically we'll see it in kind of the electronics environment where you see TV sales and electronics go up, but also in what we call discretionary spending, right? It's non-essential spending, like what we see in the power sports equipment area. You may see enough of a windfall from some of that that you're going to see some better foot traffic in dealerships. The price points in many of the power sports categories are low enough that we're going to get foot traffic even when we see mild consumer improvement. So some of this is still speculative. I need to get clean data in throughout, early part of January. I'll be looking back into December. But once we get that clean data, and if we see this continuation, then we know it's a real trend. And I would just tell you that it was still already trending over the last several months, kind of up in the long-term range. And so I have a feeling this is a little cleaner and a little better and a little clearer than what we really are thinking about. So one other area that we do look at is just the retail sales index. This is very different data than what I showed you in the compiled index that we build, but it was up about 2.9% year over year, going up against a little bit of a trough a year ago, but it was 0.4% higher than the 3-month moving average, which is actually a pretty strong signal. It only remains slightly below the long-term average, which is the dotted line here, but it's still showing us some positive growth. So even on the retail side, we're kind of getting some corroborating data and some corroboration overall on what we're seeing. Retail sales, then again, you're going to see this in every single one of my presentations for power sports. We see so much wage increase in those segments of consumers that typically drive spending in these categories. What I think is going to happen as we get into 2026 is that the benefits from the tax bill, I've talked about that many times, will kick about $2,500 a year into tax savings for most households. Some, they're actually doing pretty well, will see this as kind of quote free money. And many households will feel that they've got $150 to $200 a month extra to spend on some kind of a loan payment, a longer term loan payment. And the power sports category seems to fall right within that spectrum. So that's going to be very interesting. And I think that you're going to see a better consumer signal as we get into 2026. But I have one warning for you. It sounds like we're going to have a little bit of a Q1 malaise, right? Where Q1 is going to see some sluggish activity. We've got a lot of sectors that are still trying to get their bearings and trying to get their footing as we go deeper into 2026. We don't see corporate spending maybe reacting the way we thought it would. We see a little bit of an increase in some layoffs with some companies. We didn't see seasonal hiring at a pace that we thought it would be at. And so there are some headwinds out there in the consumer realm, but right now all the forecasts, and this one's giving us 99% accuracy rates almost 6 months in advance. And so we've got a lot of confidence in at least what the model is showing us. It's showing consumer spending, especially in the retail trade arena, staying strong and maybe fighting through those headwinds. So we'll see how this all plays out as we kind of get a little bit deeper into the year. But again, don't be surprised if we get a weak January signal followed by a little bit of acceleration in February and March, and then faster acceleration once we start to see those tax refunds kick in and a lot of consumers see that extra income. So areas to watch. A lot of construction segments are absolutely booming. I told this story in the marine video if you watched it, but there are areas in the southern areas of the United States. So draw a line through the Mason-Dixon line south, and you're going to see some tremendous construction growth in non-residential and also in residential areas in those parts of the country. And with that comes significant wage growth. Construction wages are surging in many markets by 4 or 5%, which is outpacing inflation of about 2.5 to 2.7%, meaning the wages are growing so much faster than inflation in some of those markets that there's a lot of disposable income that those households are working with. A lot of them got huge bonuses at the end of 2024. And I talked to many construction firms, especially down in the Texas area, that have backlogs all the way through 2026, spilling over already into mid 2027. And because of that, if I'm a worker and I'm hearing the CEOs come in and they're telling me that they have backlogs all the way throughout 2027, and if you got any friends looking for a job, have them contact me because I got to double our workforce over the next year just to handle that project volume. You're feeling pretty confident about your position. You're feeling pretty confident about your situation, and you're probably going to go out and take on some risk, and probably willing to go out and spend. That means I'm going to go buy a new motorcycle. I'm going to go buy, a new ATV or UTV. I'm going to go out and spend because my future, my outlook is improving, and I feel better about those conditions. Um, we know manufacturing is a little bit range bound right now, remains a little bit sluggish, but manufacturers are generally still hiring and retaining their staff. They're not laying off, and so I think you do see a lot of money kind of flowing down into the manufacturing sector, and a lot of those employees are still spending tax refunds, as I noticed, as I noted. And then we also talked about this in marine and not so much in power sports, but we are seeing a great wealth transfer. We're going to see over $18 trillion transferred over the next 5 years from older generations into younger generations. And that's going to spur some buying. And you're going to see some of the power sports growth come out of that particular measure. The last thing I'm going to mention in this one category is the farming community. And you know that side-by-side sales are a little bit sluggish. They're hit and miss. But ranchers, any cattle ranchers in the country have had a really good year. In fact, this is the second really good year that they've had. And the forecast for next year is that beef prices will continue to be fairly stable and that those producers, as they come into their third year of trying to build herd sizes, are going to have a lot of heads that they can take to market. So they're going to be cashing out, in other words. And as they do that, they're going to have a lot of disposable income to spend. Many will go out and upgrade equipment, and that means many will go out and upgrade their side by sides. They're going to go out and take on, some new payments to get some new equipment. We also will see a little bit of that in the farm community. The Trump administration is about to give over $12 billion in subsidies back to the farming community because of, what happened with some of the trade negotiations and the fact that China has not been buying soybeans until recently. And so there's going to be a lot of different factors that kind of converge early in 2026 that I think helps sales and I think really kind of lifts the economy. Again, I kind of blew over it, talked about it in the macro data, but even the Federal Reserve is very conservative and kind of the real dismal scientists when it comes to the outlook are projecting a much, much better GDP environment in 2026 than what they had originally forecast. Again, going from 1.8% growth to 2.3%. And on a $24 trillion economy, those 5 percentage points of difference is significant. It's hundreds of billions of dollars in extra spending that they're anticipating that they weren't forecasting prior. All right, so that's what I have for you. As I've done in other videos, I just want to wish you all a very Merry Christmas, a Happy New Year, and stay safe out there. And we're looking forward to a little better 2026. All right, take care, everyone.